Thank you so much, sir. I hope that all the non-commerce present over here, the audience will be enjoying the topic today because it is very much in news. So it's a very important topic. I'll be sharing up my PPT, sir. Kindly let me know if it is visual or not. Sir, is it visual, sir? Sir, is it visual, sir? Okay, thank you so much. So I'll be starting off with the impact of monetary policy on Indian economy. But before we move to the impact part, let's understand what is monetary policy. Now, monetary policy in India, when we are talking with India's reference, is a strategic tool which is being monitored by the Reserve Bank of India to regulate the money supply, interest rate, and overall economic stability. See, monetary policy is the policy which is helpful for the supply of money in the economy, and it is being monitored by the RBI. It comprises of various measures and instruments aimed at influencing borrowing, spending, and investment behaviors across various sectors of the economy. And RBI is monitoring this monetary policy with the help of various commercial banks. And the primary objective of this particular monetary policy is to maintain price stability while supporting sustainable economic growth. The RBI employs mechanisms such as policy rates, open market operations, reserve requirements, liquidity management to understand, achieve these goals. So these are mechanisms we'll be understanding later on, which I have already written: repo rate, reverse repo rate, statutory liquidity ratio for SLR, and cash reserve ratio. These are the other tools which are being used in monetary policy to control the money supply. No, in fact, this policy framework plays a very crucial role in steering the country's economic development, ensuring financial stability, and also helping to foster an environment which is conducive for growth and stability. So this policy helps to control and correct all the harmful evils of inflation and deflation. Inflation, we come across this word of the inflation, and the economy is getting bad effects of the inflation. So here monetary policy comes in picture, and it helps to monitor and regularize the money supply in the economy. Now, what is the major objectives of monetary policy? First and foremost is price stability. Now, it is very important for any economy to have a price stability. So it is a most desirable objective of monetary policy. Inflation and deflation both are socially and economically undesirable. Not a single economy favors inflation or deflation. So inflation results in inequalities and higher speculative activities. To control high prices, a strong restraint is put on money supply. Just the opposite in case of deflation, the output, the employment, and the prices falls. Now here we need to inject some enthusiasm, and hence money supply is increased. So price stability here promotes economic stability. It eliminates the cyclic fluctuations of the expansion and the depression part, and ensures equitable distribution of national income. Now, but in modern economies, they prefer mild rise in the price level to promote investment and output to achieve full employment. Next is exchange stability. This now major fluctuation in the rate of exchange encourages against speculative activities. It disturbs the smooth flow of international trade. It results in the loss of confidence of foreign capitalists. Hence, protection of gold reserve is an important task in this reserve. Full employment, that is the most desirable objective of monetary policy. The price and exchange stability is regulated to a price of secondary importance. Monetary policy ensures maximum utilization of the productive resources. It ensures the increase in the investment and consumption expenditure. Now, when we are having full employment, there is exchange stability, there is price stability in the economy. It leads to definitely economic stability. Now, it helps when a country attains economic stability, then it is very favorable. Here, the investment and the saving levels are maintained through monetary policy. Then when there is a stability, it definitely reflects to economic growth and development. It implies that the expansion of the capital stock of the country is quite stable. It means that an increase in real output of the economy, which means that the monetary policy aims to increase savings and mobilize the resources. And the last is control on cyclic fluctuation. A sound policy aims to control the cyclic fluctuations in the economic activities. The problems of the overproduction in the expansion and the low investment and output in depression are successfully tackled by the proper monetary policy. So here are the major objectives that why a country is favoring monetary policy. These are the basic part where a country can be stabilized or where a country becomes unstable. So monetary policy, there are two types of policy, fiscal policy and monetary policy. Right now we are observing the monetary policy, which is being framed by the RBI. Fiscal policy is the other part, which is being monitored and it is framed by the government. Here, now what exactly is the role of how it is being made? This is a mandate, how it has happened. So when we are talking about the monetary policy mandate, it is being implemented by the RBI, and it is under the Reserve Bank of India Act of 1934. And recently there were many changes which has included these three parts, that is the monetary policy, the monetary policy committee, the monetary policy framework, and the monetary policy process. So here, now when we are talking about the this part, the monetary policy framework, it means that when the government of India sets a flexible interest, like there is a flexible inflation target also. So over here, we are trying to understand that the which operates the monetary framework policy in the country. The Amendable Act of the RBI, it is this framework aims at setting the policy repo rate based on an assessment of the current and evolving macroeconomic situation and modulation of the liquidity conditions to anchor the financial and to anchor the financial part of the money market at and around the repo rate. Now, money market is such a market which monitors the local trading activities. Here, there are many other instruments which are there in money market. For example, when we talk about the bills of exchange, when we are talking about the call money, the notice money, we are having here commercial paper. So there are various instruments there in the money market which helps to regulate the trading system in the economy. So that thing also comes under the monetary policy framework. After that, we'll be seeing the monetary policy committee. Now, this committee is being framed by 6 members. Now, this is a very important part where it meets at least 4 times a year, and they are making some directives. Each member is having some voting part also, and the resolutions adopted by the MPC is published after the conclusion of every meeting of the monetary policy committee. Next is the monetary policy process. So the process is the monetary policy committee is now first is determining the policy rates required by to achieve the inflation target, and after that the department which assists the monetary policy committee, it formulates the monetary policy. Then the financial market committee, they meets daily to review the liquidity condition, so as to ensure that whatever policies that is being framed, it is as per the requirement. It is as per the conditions of the economy, and it is favoring also. So these are the parameters which are known as the weighted average call money rate. So this is all about the entire process of monetary policy. So after that, we'll be moving to the next part. These are the tools. Now, over here, I would like to add on one more thing, that here we have talked about the 6-member committee. Now, over these 6-member committee, first and foremost is the governor of the Reserve Bank of India. He is the chairperson, he is the ex officio. Next member is the deputy governor of the Reserve Bank of India in charge of the monetary policy. He is also a member and he is also an ex officio. The third member is one officer of the Reserve Bank of India, which is to be nominated by the central board. Again, he's a member, he is an ex officio person. The fourth person is Shashanka Bide. He is a senior advisor at the National Council for Applied Economics Research. He's a member of Monetary Policy Committee. Ashima Goyal, who is a professor at the Indira Gandhi Institute of the Development Research in Mumbai. And Jayanta Verma, who is a professor of Indian Institute of Management, Ahmedabad. All these are the 6 members. Now, the members which is being referred from Mr. Shashanka to Jayanta Verma, will hold office for a period of 4 years or until further orders, whichever is earlier. So they are they are now the 6 members, most important committee members who regulates, who formulates, or if any changes are required, they are the person who are making some strategic decisions related to monetary policy. Now the tools of monetary policy. Now we like RBI is trying to regulate the money supply. If there is inflation, it will try to pull up the money. It will try to restrict the money supply so that the demand decreases and supply, and it balances with the necessary supply and the price rate goes down. This is what is the exact situation. Now to handle this entire monetary policy, there are some tools, there are some instruments which is there in the hands of the RBI, which it implements through the commercial banks. Or there are certain instruments which is directly RBI is implementing on the commercial banks. So first and foremost, we'll be seeing the quantitative measures which is being done to the various commercial banks. Now, cash reserve ratio. The first important part is we have all must have heard somewhere CRR, that is a cash reserve ratio. What exactly is cash reserve ratio? It means a certain percentage of the total bank deposit that have to be maintained in form of liquid cash with RBI. Now, why this is important? Because this means that a commercial bank will not have access to that percentage of funds for any economic or commercial activities, because that percentage is that a certain percentage is already being deposited to RBI, which normally for everyday utilization of the funds, the commercial bank cannot utilize that particular money. So why this is important? Because it needs to be maintained in order to make sure that the bank has enough liquidity during any distress times, and keeping it up with RBI makes them safe. Because whenever they are having any distress, they can ask they can take the permission of RBI and they can withdraw their own money. So it helps backup you can talk about. So when we are having cash reserve ratio, it helps for it acts as a reserve requirement whenever the bank needs. Then it also helps to it also means it helps that when the central bank increases the CRR percentage. Right now it is 4.50. So if it is point percentage is also increased, means it brings a huge impact. So when it is having increase, when the central bank increases the CRR, banks are required to keep more money with the central bank. Now, if money is being kept more with the central bank, means the availability of the fund is less with the commercial banks. So what it helps to reduce the funds available for lending in the market. Similarly, just conversely, a decrease in CRR frees up more funds for the lending options by the banks, and it helps potentially increasing the money supply. Then CRR also is used to manage inflation, liquidity, and credit availability in the economy. It helps in the financial stability also, where banks have enough liquidity to meet the withdrawal demands from the depositors, thereby contributing to the stability in the banking system. So banks are able to perform also very nicely. RBI is also monitoring it. So it is a dual process where the supply of money is being monitored very minutely by the RBI. Then the effects on banks are also there, that higher CRR means banks have fewer funds, which I've already explained to you all. In short, we can say that CRR is a powerful tool in the hands of the central bank, that is the RBI, to manage liquidity in the banking system and influence the lending activity. Sometimes it can release more and more lending amounts. Sometimes it may restrict it depending upon the inflationary and the deflationary condition of the economy. Next is bank rate. Bank rate, it is also known as a discount rate by some countries, which refers to the interest rate at which the central bank lends money to the commercial banks or the financial institution within the country's banking system. Which, in other words, we can say that bank rate is the interest rate which is set by the central bank for lending funds to the commercial banks. It serves as a benchmark for short-term funds between the central bank and the commercial banks. So adjustment in this rate impact borrowing cost of banks, affecting interest rate throughout the economy. See, if a bank is paying a higher interest rate, for example, if the borrowing cost increases, if the bank is having a higher borrowing cost from the RBI, definitely it will potentially slow down the economic activity to curb the inflation. While when the bank rate is being reduced, it stimulates borrowing and spending to boost economic growth. So it is a key tool for monetary policy, signaling that central bank's significance on the economy and the inflation, which shows that how deeply the central bank, that is the RBI, is involved, and it's monitoring the minute supply of the money also from all possible ways. So a bank rate varies from country to country, and it is crucial for controlling influential for inflation, influencing lending rates, and maintaining the financial stability. And the next part is the open market security. We can say that open market security is one of the most influential instrument. For example, when there is inflation in the economy, the central bank immediately they buy or sell the securities in the open market. That is what is open market security. Now, when there is a high inflation, it shows that money is available with everyone. There is a high demand in the market, but the supply is not potential enough to meet with the effective demand. So what happens? There is a price rise. This is what is inflation. So when there is an inflation in the economy, immediately the central bank, it sells of the government securities. Now, when it is selling of the like government securities in the market, it is a very potential in investment for the consumers, for the customers, for the investors. So they try to invest more and more in securities. So when it is buying these buying securities, it injects the money into the banking system, increasing the reserves and lowering the interest rate. When they are selling the security, it means that it is increasing the interest rate. So selling the securities always withdraws the money from the market, because money is being now invested in those securities, which is ultimately getting deposited to the government. So this selling securities is always helped in the to curb inflation very quickly, and it helps to control the economic growth also. Now, open market operations are used to manage the money supply, influence the short-term interest rate, and achieve the monetary policy objectives. They provide flexibility by adjusting liquidity levels, and a primary tool for the central bank to regulate the economy. Means overall, we can say that open market operation, they have a very good impact on the bank's reserve, and they are helpful in the overall economic conditions, and they plays a very pivotal role in monetary policy implementation. So these three are very important. So simultaneously, we are having some more instruments also, which is the qualitative measures. There is a statutory liquidity ratio, or we can say it as SLR. Now, SLR, it is a mandatory requirement which the banks has to maintain in their own particular branch, in their own particular bank. They have to maintain it. It ensures banks to have enough assets to meet the unforeseen demands and liabilities. It's a tool for controlling the bank's leverage and credit creation abilities. Now, when we are trying to adjust the SLR, it affects the bank's lending capacity, impacting the credit availability and overall economic liquidity. The SLR percentage is determined by the central bank based on economic condition, stability goals, and banking system requirement. Currently, the SLR rate is 18%. Now, repo rate. Repo rate, and we are having one more, that is a reverse repo rate, as you can see. So first we'll be starting up with the repo rate. The repo rate, means it is the interest rate at which the RBI provide funds or the overnight liquidity to the commercial banks. Means when the commercial banks are in need of the money, they approach to RBI. Hence, RBI is also known as bankers' bank. So they provide funds to the bankers also. So commercial funds often need why these commercial banks need money to operate their regular lending businesses. While there are other sources of funding for a commercial bank, but still a bank can also borrow from the central bank. There is a provision. So a higher repo rate increases borrowing costs for banks, curbing liquidity and slowing the economic activity to control inflation. Now, exactly opposite happens at the time of deflation, that lowering up of the repo rate makes the borrowing cheaper, stimulating economic growth. So it's the key tool for monetary policy, signaling the RBI stance or the hold on economic conditions and inflations. So adjustment in repo rate impacts banks' borrowing cost and other ability to lend, affecting the credit availability and economic momentum. So over here, repo rate, it is between the RBI and the commercial bank. Exactly opposite it is happening. Currently, we can have the current repo rate as 6.50. So exactly opposite is the reverse repo rate. So when we talk about reverse repo rate, it means that it is the interest rate in which the central bank borrows funds from the commercial bank. Now, this is very interesting. What the commercial banks are, the central bank, that is the RBI, is taking funds or borrowing funds from commercial banks. So it acts as a tool to absorb excess liquidity in the banking system. It is not because RBI is not having a money, but it is trying to absorb the excess liquidity which is there in the economy just to stabilize the inflation and the deflation conditions. A higher reverse repo rate, it means it incentivizes banks to park more funds with the central bank. Means when more and more funds are being sent to, it's being given or it is borrowed by the RBI, which the commercial banks are quite happy to do it because it's a confirmed because it's an investment where the commercial banks get interest from the RBI. So they are okay with that this condition. But ultimately, what happens? It reduces the money supply, which is very much required to control the inflation in the economy. So lowering the rate discourages the banks from keeping excess funds with the central bank, thereby increasing the money supply to stimulate the economic activity which is required at the time of deflation. So this reverse rate is a mechanism used by the RBI to withdraw funds from the commercial banks in order to draw liquidity from the economy. So all these parts are the quantitative measures of the of RBI. Now here we are having the other part, that is the qualitative. Now over here, qualitative measures means it refers to indirect or regulatory tools used by the central bank to control the money supply or the credit conditions. Earlier, what we have seen, it is the quantitative measures. These were the direct measures. Means what we were seeing earlier means these part, that is a CRR, bank rate, open market security, SLR, repo rate, reverse repo rate. These are the quantitative measures. These are the direct methods. Whereas now what we are seeing the indirect methods, which are used again to influence the financial conditions and allocation of the credit. So let us, what is credit rationing? It means that the central bank might establish the guidelines or the limits on the amount of credit that a bank can extend to a certain sectors or activities. It is a guideline or it is a benchmark for the, not a benchmark, it is a boundary line for the banks. This is often used to control speculative lending or to a direct credit towards specific industries, which is definitely important for which is deemed important for economic development. Moral suasion, this involves using persuasion or guidance or informal pressure by the central bank on financial institutions to encourage certain behaviors. It may involve public statements or private communication to influence lending practices or risk management. Directives, we are having consumer credit. Consumer credit means it refers to the regulations or the guidelines governing how individuals access and use credit for their own personal expenses. Every individual is having their own credit depending upon their income level. So these measures aim to influence spending behaviors and manage overall credit risk of the economy, ensuring financial stability. It means where we are able to create a boundary on each and individual's lending credit taking capacity. By controlling consumer credit practices, central banks seek to mitigate excessive borrowings that could lead to economic imbalances or financial crisis. So everyone is having certain, boundaries beyond which they are not able to get any more credit. So when this is implemented in a proper manner, it helps in the overall the aim, that is spending behaviors, to manage the overall spending behaviors and the credit risk. It is being managed properly. Then directive and guidelines. It is a central bank. It issues some guidelines to regulate lending standards and practices. So it means, for example, RBI establish some guidelines for the specific type of deposits or some risk management practices. So that is the directives which they are giving on certain sectors for where credit is being considered. Margin requirements. Now, these regulations apply to borrowings to purchase securities. Adjusting margin requirement can influence the amount individuals and institutions can borrow to invest in financial markets. And the last is regulatory changes, means altering certain, we are having some changes in the where the regulation is concerned. So altering regulations related to banking, such as capital adequacy requirements on risk-weighted average, these assets can impact lending behavior and the stability of financial institution. So overall, what we can see is that these measures, which we have right now seen, can be used with the quantitative measures. It's not like only qualitative or only quantitative. Both can be used simultaneously to shape the lending behavior or to manage risk and ensure the stability of the financial system. They offer the central bank, that is the RBI, additional tools to influence credit availability and direct it towards specific sectors or some specific purpose where inflation or the deflation needs to be handled accordingly. So these are certain instruments, these are certain tools under monetary policy. Now, when we talk about the impact, first and foremost, why we are implementing this monetary policy? We are trying to implement the monetary policy because of there are certain risk. There are certain unfavorable conditions in the like within the economy due to its demand and instability between the demand and supply. So when the demand increases, when the standard of living increases, income increases, definitely demand increases. But simultaneously, the respective supply part, we cannot increase it as easily and as comfortably demand increases. So it takes some time. So this gap here is when the price increases. So we need to control this inflation, because if the inflation are not controlled at proper time, hyperinflation can lead to the collapse of the economy. So first and foremost, we need to understand that monetary policy is very significant tool to influence the various aspects which is related to the money supply. First and foremost is the inflation control. The Reserve Bank of India uses monetary policy or tools to manage inflation. By adjusting the interest rates and liquidity, it aims to keep inflation within the target range, which is crucial for the stable economic growth. See, higher or mild inflation is always favorable, because it helps in the proper utilization of the resources within the economy. It helps in the full utilization, rather, I can say, for the full utilization of the resources. But when it is moving beyond a certain aspect, when the demand increases quite substantially high and the supply is not able to meet with the demand, price increases. So here it is very important to control the price, because it leads to instability. Now, interest rates. Changes in policy rates, such as repo rate, which we have seen, which it impact the borrowing and lending rates throughout the economy. When there are lower rates, it encourages the borrowing for business and individuals. It stimulates the investment and consumption. Whereas whenever the interest rates are increased, it always withholds the supply of the money. So definitely it discourages the borrowings of the business, and it also discourages the investment and the consumption in the economy. So we need to constantly monitor. Sometimes we have to release the money supply, sometimes we have to withhold the money supply. Then economic growth. Now, over here, the proper monetary policy can really increase the economic growth by making credit more affordable. However, excessive easing might lead to inflationary pressures. Now, when we are trying to have a good, favorable economic conditions, definitely we have to implement both the expansionary measures and the contractionary measures of the monetary policy. It means releasing up of the money, or we have to withhold the money. So when we are trying to increase the demand, then definitely we have to loosen up the money supply. When there is excessive easing out, it might lead to the increase in the inflation. So we have to maintain a proper manner so that economic growth and the development are achieved in the economy. Now, exchange rates. Now, monetary policy influences the value of Indian rupee. Lower interest rate can weaken the currency, boost exports, potentially increasing import cost. So, financial markets, policy changes affect stock and bond markets. Lowering rates can lend to increased investment in equities, and it can have a definitely it can lower rates can increase investment in equities, but might also increase the market risk due to excessive liquidity. Financial the fiscal debts are there, government borrowings are there. Then when we talk about fiscal deficit means we are talking about the government part. Deficit means where my borrowings, my expenditure is more than my income. So there is a drawback. So we can say there is a negative part. So here fiscal deficit, monetary policy indirectly impacts government borrowings also. Higher rates can increase the cost of servicing government debts. Credit availability and banking sectors. Monetary policy influences the banking lending decisions. When we are having a restrictive policy, then credit availability is slowed down. It affects the sectors dependent on the borrowing, while easing can boost in lending. So these are the various parts of the impact of the monetary policy. Now, monetary policy is very much important for economic planning. It is very much important for investment and production, and it also encourages the banking and the non-banking sectors also. So There is when we are talking about there are other parts. For example, when we talk about the investment and saving, there is lower interest rates can encourage investment, but might discourage traditional saving avenues. The impact varies across from different income groups and sectors. Employment and unemployment, expansionary monetary policy can promote job creation by fostering economic growth, whereas lower interest rates can often lend to increased business activities and investment, potentially reducing unemployment rates. So, the effectiveness of monetary policy in India depends on various factors, including the global economic conditions, domestic growth trends, inflationary pressures, and policy transmission mechanism. The Reserve Bank of India aims to strike a balance between the inflation control and promoting economic growth while ensuring price and financial stability. Means we can say that monetary policy over here, it can be a tool for economic development. It can be the developing economies, the economic development or in your developing economies needs economic planning. And the important element of economic planning is definitely monetary policy. Monetary policy helps in expansion of credit and making available money at right decisions at proper time. So it helps in the economy to make efforts for achieving the economic growth and stability. Then it helps to increase the investment and production. It requires the flow of money and credit. The monetary policy through selective and means which we have seen, that is the qualitative and the quantitative methods, help in investing in right direction and in appropriate time. Then encouragement to banking and non-banking institutions, one of the important the impact one of the important impact which the monetary authority is able to create is to create and expand the credit in the economy. It helps in improving the internal and external trade. As banks and non-banking financial institution, it helps in giving credit. So it also helps to manage the public debt, that is the government borrowings, or for the development of infrastructure and the development of the transport the network. But imposer utilization will lead to burden on public. Hence, monetary policy helps in the management of public debt. And definitely it has having, along with the other part, the importance of monetary policy, it is increasing year after year because the role is very relevant in attaining the monetary objective, especially by managing the price stability. We are able to understand that price stability is one of the important part. Then it is helpful in the development of money market. Now money market is about the integration of the organized sector and the unorganized sector. So when we are talking about the the money market, means we are talking about the organized sector, because RBI itself is a part of the money market, along with the commercial banks and other corporate houses. So these are the use of the important weapons. Along with that, the use of importance of monetary weapons like bank rate, CRR, SLR, repo rate, and the reverse repo rate have increased over the years. Every year, 4 times the monetary policy committee, they meet together and they're taking care of the conditions of the economy on an overall process. So in short, I can say that repo rate and over here, the repo rate and the reverse repo rates are most frequently used the monetary techniques in recent years, because here it is having a direct impact between the commercial banks and the RBI. So thus we can say that the short-term objective of price stability is more successful for Indian economy than for a long-term objective of the development. So monetary policy has played a very important role in these few years with the development and the stability of the economy. So in short, we can say that as a conclusion, that monetary policy in the Indian economy plays a very pivotal role in steering the economic stability by regulating inflation, managing interest rate, and fostering the conducive conditions for growth. Means when we are talking about the RBI, it uses various tools such as the repo rate, reserve repo rate, liquidity adjustments to influence the credit availability and the borrowing cost. Then, while aiming to maintain the price stability within set targets, RBI also navigates challenges posed by the global economic shifts, structural constraints, and the domestic growth dynamics. Effective transmission of the policy to the real economy remains a concerning impact, impacting actual impact of the rate adjustments on investment, consumptions, and the employment. So over here, like collaborative efforts between monetary and fiscal policy are essential to address the structural issues and reinforce the effectiveness of monetary policy in sustaining the India's economic resilience and the growth aspects amid the dynamic global aspect, the global landscapes. So in short, we can talk about that monetary policy. The main objective of the monetary policy is to check the credit which is created by the bank and to stimulate the investment and the employment. Means when there is a hyperinflation or overinvestment, a dear money policy is used. Now, dear money policy is used. Your borrowing rates are increased. It helps to check the credit rates by the bank. And if we're talking about the cheap money policy, it means that in atmosphere of depression, cheap money policy is a tool. It means that the interest rate is low. It stimulates investment and employment. So when the atmosphere of the depression, when there is a atmosphere of depression or recession, cheap money policy is used. Means here the interest rates are low, which stimulates the investment and the employment. So overall, we can say this is the main what is monetary policy, which is all inclusive of the various tools and how it is helpful to manage the money supply in an economy. So this is all about the monetary policy of the Indian economy. We are having fiscal policy also, which the government monitors it, but it is not covered over here because we are focusing on the monetary policy itself. So this is all about the monetary policy from my side.
Thank you, madam, for your presentation. I request all the participants to unmute and discuss with the respective person, madam. Thank you.
Sir, I'll be really happy if there is any discussions or if anyone is able to give some input, which will help me also to understand a better understanding. So if it is there, please let me know. See, overall, what I've tried is about the monetary policy, which we generally hear about. Generally, we hear about GDP. We are talking about inflation. We are talking about all these aspects. Like this is related somewhere when we are talking about inflation. It is definitely related to the monetary policy, and only RBI is able to concentrate on the supply of money. It is having we all know that it is having a monopoly of note issue. Similarly, it is having its own monopoly to control the money supply in the economy with the help of commercial banks, either directly, that is with the help of quantitative, or indirectly, that is the qualitative measures. And timely, it is being changed depending upon when we have to increase the money supply or when we have to loosen up the money supply in the economy.
हेलो, नमस्ते मैडम। मैडम, जो प्राइवेट सेक्टर के बैंक है, जैसे कोऑपरेटिव बैंक रहते हैं और एक राष्ट्रीयकृत बैंक रहते हैं, तो जो आरबीआई की जो पॉलिसी रहती है, क्या इनके लिए भी कुछ अलग अलग रहती है, सबके बराबर ही रहती है?
सर, अगर कमर्शियल जैसा रहता है, जो नॉन बैंकिंग फाइनेंशियल इंस्टीट्यूशंस है सर, उनके भी अलग अलग एस्पेक्ट रहते हैं। इवन कमर्शियल बैंक की भी अगर मैं बात करूंगी तो एसएलआर जैसे स्टैट्यूटरी लिक्विडिटी रेशियो है, जो एक बैंक को कंपल्सरीली लिक्विडिटी रखना पड़ता है। बिकॉज आई बीइंग अ कंज्यूमर, में कभी भी मेरा पैसा मेरे अकाउंट से मैं विड्रॉल के लिए आई कैन आस्क फॉर इट। तो अगर बैंक के पास उतना पैसा होना बहुत जरूरी है, तो दे हैव टू कीप अ बेसिक मनी, उसको कहते हैं एसएलआर। लेकिन उसका ब्रैकेट आज हमको 18% जो मिलता है, लेकिन उसका ब्रैकेट गवर्नमेंट ने दिया, सॉरी द आरबीआई हैज गिवन टू 40% ऑल्सो। तो 18% से 40% के बीच में जितने आपके फुटफॉल्स है, जितने आपके विड्रॉल्स होते हैं ऑन एन एवरेज मंथली बेसिस में, आप वो परसेंटेज फिक्स कर सकते हैं। तो ऐसा डिपेंडिंग करता है ओवरऑल हर एक बैंक के लिए, जो बैंकिंग का हर एक का कंज्यूमर्स का कैपेसिटी अलग अलग है। लेकिन जैसे कुछ चीजें जैसे सीआरआर, तो उसका ब्रैकेट फिक्स्ड है सर। आपको 4.50% आपको आरबीआई के पास रखना कंपलसरी रहता है। अगर बैंक को कुछ प्रॉब्लम फेस कर रहे हैं, कुछ प्रॉब्लम, आप तो आरबीआई से विड्रॉ कर ही सकते हैं, बिकॉज आरबीआई जो है वो बैंकर्स बैंक बोला जाता है। लेकिन अगर उसके बावजूद अगर आरबीआई के पास नहीं जाना है और उनको वही मनी इशू का अपना यूज करना है, तो वो आरबीआई से ही परमिशन लेकर विद द बाय मेंशनिंग द प्रॉपर रीजंस, वो आरबीआई से वो परमिशन लेकर अपना वो पैसा यूज कर सकते हैं। तो हर एक बैंक के लिए अलग अलग रहता है, डिपेंडिंग कि कौन से सेक्टर्स के लिए क्या डेवलपमेंट है सर।
जी धन्यवाद मैडम। मैडम दूसरा सवाल मेरा ये है कि जो हमारे बैंक है, अगर सपोज करो मेरा बैंक एसबीआई में मैं 10 लाख डिपॉजिट है और बैंक डूब जाती है, तो अभी कुछ पेमेंट बढ़ाया है क्या? इनके लिए बोले थे कि 5 लाख किया है कि मिनिमम वापस मिलेगा, इसके बारे में थोड़ा।
यस सर, ऐसा बोला गया है कि अगर आपके पास अकाउंट में अगर आपका पैसा रहता है एंड विच द बैंक इज अवेयर, आपके पास वो ऑथेंटिसिटी है जहाँ पे आप डिक्लेयर कर सकते हैं कितना पैसा मेरे पास था एंड बैंक इंसॉल्वेंट हो गया है अभी, तो आई नीड टू, आप क्लेम कर सकते हैं सर। एंड मिनिमम आपको जो पैसा मिल सकता है दैट इज 5 लाख ऑफ रुपीज। अब तक तो वही है सर, एज पर माई नॉलेज। अब अगर कुछ चेंजेस आया होगा, आई नीड टू अपडेट माई सेल्फ।
जी थैंक यू मैडम, बहुत बहुत धन्यवाद, अच्छी जानकारी साझा की, बहुत बहुत धन्यवाद।
थैंक यू सर, धन्यवाद सर।
हेलो मैम, मैम आई हैव वन क्वेश्चन। मैम जैसे आपने सीआरआर का बोला है, तो वो चाहे प्राइवेट बैंक हो चाहे वो कमर्शियल बैंक हो, सभी को रखना पड़ता है?
जी सर मैम, अंडर द जुरिडिक्शन ऑफ इंडियन इकोनॉमी जो भी है, आप अगर मनी लेंड कर रहे हैं और आप अगर यू आर हैविंग सम डिपॉजिट आल्सो, तो आपको वो सीआरआर का ब्रैकेट आपको फॉलो करना है। जो भी इंस्टीट्यूशंस रहते हैं, इवन फॉरेन बैंक्स आल्सो जो ऑपरेट होता है इन इंडियन सेक्टर्स, इंडियन इकोनॉमी को सबको फॉलो करना पड़ता है आरबीआई के नॉर्म्स में।
ओके, थैंक यू मैम। मैम एक सेकंड क्वेश्चन था कि सपोज इन द रिसेशन सिचुएशंस, इफ देयर इज अ इन्फ्लेशन, अगर इन्फ्लेशन है तो हाउ मॉनेटरी पॉलिसी विल हेल्प टू रिड्यूस द रिसेशन?
मैम एक्चुअली अगर हम बात करते हैं इन्फ्लेशन में, तो इसका मतलब होता है एक्सपेंशन ही हो रहता है, क्योंकि मनी सप्लाई ज्यादा है इंडियन इकोनॉमी में, मतलब कोई भी इकोनॉमी में। अगर फॉर एग्जांपल आज मेरा अगर 10,000 रुपीज मेरा सैलरी है, तो मेरा जो एक्सपेंडिचर रहेगा, स्पेंडिंग रहेगा, वो 10,000 के ऊपर ही रहेगा। लेकिन अगर मेरा ये सैलरी बढ़कर अगर 30,000 हो जाता है, तो डेफिनेटली मेरा स्पेंडिंग भी बढ़ेगा मैम। तो मतलब जैसे जैसे मेरा इनकम बढ़ेगा वैसे वैसे मेरा स्पेंडिंग बढ़ रहा है, लेकिन उतनी तेजी से सप्लाई नहीं हो पा रहा है। चाहे आप वो एग्रीकल्चरल गुड्स का लीजिए, क्योंकि एग्रीकल्चरल गुड्स को कल्टीवेशन में कुछ समय लगता है, या अगर आप मैन्युफैक्चरिंग गुड्स की भी अगर हम बात करें, मॉडर्न टेक्नोलॉजी वगैरह सब है, लेकिन वो जहाँ पे प्रोडक्शन होता है और जो डिस्ट्रीब्यूशन चैनल्स है, उसमें ना कुछ गैप रहता है। तो हम लेकिन मुझे डिमांड करने के लिए आज जब मेरे अकाउंट में अगर पैसा आ गया, तो मैं तुरंत जाकर दुकान में मैं डिमांड करूंगी। तो मेरा जो डिमांड करने का टाइम है और गुड्स का जो सप्लाई करने का जो समय है, वो मैच नहीं होता है। तो जब मैं बात कर रही हूँ इन्फ्लेशन की मैम, तब बात होती है कि मेरे पास पैसा ज्यादा है, लेकिन मार्केट में गुड्स एंड सर्विसेज का सप्लाई नहीं है, तो तब इन्फ्लेशन होता है। लेकिन जब मैं बात करती हूँ रिसेशन की, ये तब बात है जब प्राइस डिक्रीज हो जा रहा है, जॉब कट हो रहा है। हम बात करते हैं रिसेशन हुआ है, जॉब कट हो जाता है, बहुत सारे लोगों को नौकरी से निकाल दिया जाता है, तब जब पार्ट होता है वो रिसेशन जो पार्ट होता है, तब हम लोग जो इन्फ्लेशन डिफ्लेशन को कंट्रोल करने के लिए देते हैं, एग्जैक्टली ऑपोजिट रहता है। तब मनी सप्लाई को बूस्ट अप किया जाता है इकोनॉमी में, उसको ना मतलब इंट्रोड्यूस किया जाता है, इजीली लोगों के हाथों में ना पैसा दिया जाता है, ताकि आप डिमांड इंक्रीज करें। क्योंकि जब रिसेशन होता है मींस इकोनॉमी डाउनफॉल हो रहा है, डिमांड सबसे पहले कम होता है। डिमांड क्यों कम हो रहा है? क्योंकि जॉब कट हो रहा है, प्रोडक्शन लो हो जाता है, इन्वेस्टमेंट खत्म हो जाता है। तो ये सब चीजों की वजह से ना हम लोग को मनी सप्लाई को पुश करना पड़ता है इकोनॉमी में, लोगों को इजीली इंटरेस्ट रेट्स देते हैं ताकि लोग मोटिवेट हो और ज्यादा मनी सप्लाई के ज्यादा डिमांड करने के लिए। लेकिन अगर हम इन्फ्लेशन की बात कर रहे हैं, तो इन्फ्लेशन का मतलब होता है कि वेयर वी आर ट्राइंग टू अंडरस्टैंड कि इकोनॉमी में व्हाट टू से मनी सप्लाई बहुत ज्यादा है, तो दोनों कंडीशंस में मैम अलग अलग पार्ट होता है। भले अगर मैं सीआरआर की बात करूं, तो एट द टाइम ऑफ इन्फ्लेशन सीआरआर का जो परसेंटेज है वो ज्यादा रहेगा, लेकिन अगर डिफ्लेशन की बात करूं तो यही सीआरआर को फिर आरबीआई रिलैक्स कर देती है थोड़ा। तो इसमें क्या होता है, जैसे रिलैक्स कर दे रही है, तो इसमें क्या होता है, बैंक्स इजीली और ज्यादा लेंड करने के कैपेसिटी में रहते हैं, तो दे फील मोटिवेटेड कि वो इजीली, एक तो वो खुद उनके पास पैसा बच जाता है तो वो ज्यादा सप्लाई करना चाहते हैं। इंटरेस्ट रेट कम रहता है तो हम कंज्यूमर्स को भी इंटरेस्ट रेट मतलब लोन लेने में कंफर्टेबल रहते हैं। जैसे होम लोन्स का रेट अगर कम हो जाए तो वो पर्टिकुलर फाइनेंशियल ईयर में बहुत ज्यादा होम लोन्स का रिक्वायरमेंट आता है। तो इन दिस मैनर इट इज बीइंग फॉलोड। कभी हमको प्रेशर देना क्रिएट करना पड़ता है, कभी उसको खींचना पड़ता है, कभी मनी सप्लाई को खींचना पड़ता है, या कभी मनी सप्लाई को रिलीज करना पड़ता है। रिलीज हम डिफ्लेशन या रिसेशन के वक्त करते हैं, और मनी को खींचते हैं मार्केट से। मार्केट में बहुत ज्यादा मनी आ जाता है, तब हम जो खींचते हैं वो इन्फ्लेशन के टाइम में खींचते हैं।
थैंक यू सो मच मैम।
थैंक यू मैम। Sir, I would like to talk about one thing, sir, to you. Thank you so much, sir, for giving this opportunity. ये जो platform आपने create किया है ना, it is such a wonderful platform where we are able to gain also many knowledge. मैं आपका I will like, और जो platform दिए, it's very comfortable platform because there are many such sessions where we are able to showcase our talent also, and we are able to gain so much knowledge also. तो सबसे पहले तो thank you, sir, कि इतना अच्छा प्लेटफॉर्म एक क्रिएट करना, इट्स अ वेरी नोबल थॉट जो आपने क्रिएट किए हैं सर। थैंक यू सो मच। ओके सर।
थैंक यू सर।
थैंक यू सर।
मैम को मेरे तरफ से बहुत बहुत धन्यवाद। मैं तो एक बात बोलना चाहूँगा कि बेदकर सर का जो ये अभियान है बड़ा ही सार्थक है, और आज इस बहाने आपसे भी हमें जुड़ने का मौका मिला, आपसे भी कुछ जानने और सीखने का मौका मिला। और सबसे बड़ी बात है कि हमारे बिहार में महापर्व छठ का दिन है और आज समाप्ति हुई है, और इस मैं छठ माता से ही दुआ करूंगा कि आप लोग जो भी परिवार हमारा एक इस पर जुड़ता है उन पर कृपा बनी रहे। और मैम क्या कहूँ, आज आपने एक नई जानकारी दी है, मैं इससे बहुत कुछ जान पाया और सीख पाया, क्योंकि इकोनॉमिकली मैं कोई छात्र नहीं था, मगर सर के माध्यम से कॉमर्स डिपार्टमेंट के बहुत सारे जब यहाँ वक्ता आते हैं, जब कुछ बोलते हैं, और अच्छा ये भी लगता है क्योंकि हर लोग बैंकिंग सेक्टर से जुड़े हुए लोग हैं, और कॉमर्स की जानकारी ना हो और इस तरह की जानकारी होने से लोगों को बताने में, अवेयरनेस करने में भी आसानी होती है। तो बहुत अच्छा लगता है, क्योंकि एक पत्रकारिता का विद्यार्थी होने के नाते और पत्रकारिता का कार्य करने के नाते मेरे लिए बहुत बड़ी बात है कि मैं इस यज्ञ में प्रत्येक दिन शामिल होता हूं और कुछ जानने और सीखने का मौका मिलता है। इसलिए मैं बेदकर सर को बहुत बहुत धन्यवाद देना चाहूंगा। और मैम आपको तो विशेष रूप से बहुत अच्छा लगा, आपका प्रेजेंटेशन बड़ा ही बेहतर था। और सबसे बड़ी खासियत क्या है कि बेदकर सर ने इसकी सारा जो भी कार्यक्रम होता है प्रत्येक दिन सभी लाइव है, और ये कभी मैं पीपीटी मांगता भी, मगर अब पीपीटी मांगने की भी आवश्यकता नहीं पड़ती, क्योंकि जब भी मैं कभी कुछ छूट जाता है तो मैं बैठकर इसे बाद में भी पूरा कर लेता हूँ। तो बहुत अच्छा लगता है कि कम से कम सर ने एक ऐसा प्लेटफॉर्म, सही मायने में एक ऐसा प्लेटफॉर्म क्रिएट किया है जहाँ कभी भी किसी की भी जरूरत होगी, खासकर किसी विषय के लिए उन्हें सोचना नहीं पड़ेगा, यहाँ हर चीज अवेलेबल हो जाता है। बहुत अच्छा लगा मैम आपसे भी बात करके। और बेदकर सर का तो मैं क्या कहूँ, मैं तो हमारे गार्जियन तुल्य हैं, उनसे मैं बहुत कुछ सीखता रहता हूँ। धन्यवाद
सर। सीरियसली वेरी गुड प्लेटफॉर्म। थैंक यू सर।